With over 5,000 lenders and 15 million people getting mortgages, how do you figure out what's a good deal? So don't go away. That's what we're going to talk about next. Okay, so you finally said, we're going to buy that house. Let's get pre-approved. We're going to refinance. Our forbearance just came up and we need an exit strategy. What do? We lived off credit cards for years and I need to refinance and to tap into some equity we have in our house to pay off these bills. Okay, so you finally know that you're wanting a mortgage. Now what? Okay, there's over 5,500 entities in the country that do mortgages. So finding that needle in a haystack is hard in itself. But what I want to focus in on today is once you do this, how do you know exactly what you're getting? And then how do you compare that to maybe other offers that you can get? The one thing we're going to focus in on here is your loan estimate. Okay, so the first thing I want to do is explain to you what is a loan estimate. Well, a loan estimate is this. A loan estimate is a 3-page form that presents home loan information in an easy-to-read format, complete with explanations, okay? It's standardized. Everybody that does a mortgage and gets a mortgage on a residential property is going to get a loan estimate. Unless it's hard money lending or some weird loans, you're going to get a loan estimate, and you're going to get it within 3 days of applying for a mortgage, and I state that every day. All right, so now, what is a loan estimate? Well, it's an easy to read format that blah, 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 blah. Well, let's go through it. Look at all these numbers and words and formats and all the other. That's page 1 of the 3. There's page 2 of the 3. It has a bazillion numbers over here and over here and over here. And then over here, it has all kind of formats and percentages and everything else. So let's simplify this so you guys know how to read it, okay? And here's why you want to read it. Because let's say, for example, and I say this all the time, you see something that says the rate today is 2.5. Then you watch my mortgage rate updates every day and you see rates are at about 3. How do I get 2.5? I'm just good. Well, there might be more behind that story. When you get to this, you're going to find out all the stuff in the background so the lenders can't pull a fast one on you. That's the whole big issue, or the whole reason why this was created, to make it in a 3-page easy to read format. It's going over all the numbers with you, but it can be confusing, really confusing. So let's go over it so you guys get it. All right, so the first thing we're going to do is go to page 1, and I'll put this link to the this estimate actually down below in the description. This is actually from the CFPB. They are the entity out there was governed to protect you against unscrupulous lenders. Okay, so the page 1. Let's just go through page 1. A caption on the side is going to tell you which each one of these spots represents. So you can see, first thing is check the spelling of your name, and that's going to be in here. It's going to be your name and you're at your current address. Check the loan terms, the purpose, the products, the loan type. Is your rate locked? Check the loan amount. Is it what you're expecting? Is your interest rate fixed or adjustable? Do you have a prepayment penalty? Does your loan have a balloon payment? Do you even know what a balloon payment is? Does your estimate total monthly payment match your expectations? Do you have items in your estimated taxes, insurance, and assessments that are not escrowed? Do you have enough cash on hand to cover your closing costs? Okay, that's page 1. So let me go through this and break it down for you in easy to read terms. The first thing is you have the date, okay? Make sure the date's accurate. In this case, it's 2013. I would get a hold of my bank and say, it's not 2013, it's 2021, and give them the accurate date, but this is probably going to be accurate. Your application, applicants on here, is it you, your spouse? Is the address correct? Okay. The next thing is the property. Does it match the property that you're financing? It might be the one that you're living in now, but if you're buying a new house, it'll have a new property in there. Okay. The next thing in this case, it'll say sales price. It'll say the value of your home. All right. So it'll give the value of your home right there. It says sales price here because this one is a purchase. And then on the right side over here, it's going to say this is a 30-year term. Okay, it's 30 years. Doesn't say it's fixed there, but it's going to say it down below a little bit further. What kind of transaction is this? What's the purpose of the loan? You're purchasing a home. Is that accurate? Fixed rate. Make sure it's fixed rate right now. Not a lot of people are doing adjustables. And what type of loan is it? Conventional, FHA, VA, or other. Make sure that is accurate. All right. Then the next thing is your rate locked or not? This one says yes, and it'll give you the time that you have until that rate expires. Okay, so now what is a rate lock? And let's break that down a little bit in details. A lot of times when I send this out to a client, the rate's not locked yet because we're monitoring that rate. That doesn't mean your rate isn't adjustable. It just means we haven't locked in your rate yet. Here's what I mean by locking in your rate. Let's say, for example, here's the analogy I use. I like Google stock, or in today's market, I like Tesla. And Tesla's stock is rallying, or it's going up and down and up and down. If I'm just watching that stock, I'm thinking about buying it, but I'm just watching it. That watch time would be represented as a float. That's a float period. I'm getting somewhere. Once I buy the stock, I'm like, I like Tesla at this price. You like your mortgage at that rate. We lock in that. When I lock in my stock, I buy it. Now I bought Tesla, and I'm just making up this number, for $2,000 a share. The next day, it plummets. It goes to $1,500. I can't go back and say, oh, Mr. Broker, I don't want that stock anymore. I wanted today's price. You can't do that. You locked in. So basically, that's what it means on your rate. Once you lock in, you own it, you got it, you got to close at that rate or start paying penalties and buy down the rate and other things. So that's why the lock date is important and the duration of time, because your loan has to get processed, get closed, and fund during that time duration. If it doesn't, let's say it's locked for 30 days and you locked it on January 1st, and then come February 3rd, you're out of your lock period and you didn't close. Well, your rate's no good anymore. Your lender has to now go back and re-lock you or pay an extension fee. So all this stuff is important. I hope you just learned a little bit there about the rate lock. Okay, so you want to pay attention to your rate lock. Now we get into some numbers here. This goes over the loan amount. Is the loan amount what you expected? Your interest rate. There it is right there. It's going to show it in, it's blatant right there. Okay, now we have the monthly payment, but this is principal and interest. That is just the payment on the loan. When you're buying a house, you have other pieces of owning a house. What else would it consist of? And we're going to get there in a second. Prepayment penalty. Do you have a prepayment penalty? It's going to tell you yes or no. And right here, this one says yes. You're going to have a $3,200 penalty if you refinance within 2 years. Okay, so be very careful of that as well. Balloon payment, this one says no. What a balloon payment is let's say, because this loan is based on a 30-year term, let's say though you have a 5-year balloon function in this loan. Okay, so basically what it's saying is it's amortized over 30 years, all right? And that's what created this payment. We took this rate, that loan amount over a 30-year time frame, and made that payment. But after 5 years, the loan balloons, meaning whatever the balance is at that time, you have to refinance. Okay, you have to come up with a balloon payment, that's what balloon came from, and put it down and buy this loan or pay off this loan. Okay, basically it's saying it's going to balloon, it's going to pop, meaning you have to pay it in full at that time. This one doesn't have a balloon feature, so you can go 30 years with the same payment and your loan will be paid off. Okay. So now, what is your housing payment? Okay, and this is where it gets a little bit confusing. Your principal and interest is there, and it matches up here. This is the loan amount, the term, and your rate. If you break that down into a payment, it comes out to that, $761. But when you're buying a house, you have other features or other pieces of the puzzle. That includes your real estate taxes, your homeowners association, your homeowner's insurance, a whole bunch of other stuff, and that would be represented down here in your estimated escrow. That's there, and I'll show you on page 2 where this breaks down. Then the next thing is, on this one, they have mortgage insurance because they didn't put down 20%, So they needed what was called mortgage insurance. So now you have your principal and interest payment plus your mortgage insurance, also represented MIP, and then your escrow, your taxes, insurance, and anything else. So now that is your house payment. Okay, far cry from that. Right, so you get that. And it's saying here, your taxes and insurance come to $206 a month, and that consists of your property taxes and homeowners insurance. It's represented right over here. All right, this now shows what your estimated closing costs are, $8,000, and then how much money you're going to need at closing. All right, so that's page 1. We go to page 2, and now it breaks down all the nitty gritty. You remember on page 1, it said you have estimated closing costs of $8,054. Well, what does that consist of? Right here. So the top left is one of the most important sections that we focus in on. Okay, this will give you all the costs, the loan costs. Okay, so when I'm breaking down for somebody to explain cost and fees and everything, what there is going to be, there's a couple different buckets that I say. The buckets are this. How much is the lender charging you in fees? How much are the legal fees in this transaction? Like if you're buying a house, you have to record the deed and all this other stuff, even if you're doing a refinance. And then what other fees are incorporated in this? So that's where we're gonna break this down. The top left is basically the lender fees. Okay, so this company is going to charge you an origination charge of $1,808. That's broken down as 0.25% of the loan amount in points, which is $405, an application fee $300, and an underwriting fee of $1,097, which totals $1,802. So that is what the lender is going to charge you. All right. And then there's other services for the loan that you cannot shop for. It says right there, cannot shop for. And those items many times are the appraisal fee. Those that usually range between $400 and $500. Credit report fee, flood fees to see if you're in a flood zone, flood monitoring, tax service fees, and all these other things. These are very common numbers when it comes to getting a loan. These are third-party costs. Again, right here, this is exactly what your lender's charging you, but these are services they're going to use that they're going to order and manage on your behalf. Then down here, these are things you can shop for, but are still needed in the loan transaction, okay? You might need, this one's probably a VA loan, so they need a pest inspection. And I think it said conventional. So a lot of times you don't need a pest inspection, only for VA loans. But let's go through it anyways. A pest inspection, you pick the pest company. A survey fee, if a survey is needed, you pick the survey company. Title insurance, title policy, settlement agent, and all the title company or the attorney, you choose them. Okay, many times we can do this on your behalf because you probably don't know a title company or an attorney or so forth. So we can help you in this area, but I'm just breaking down the loan estimate. Then we go to the top right, and this starts going through government fees and other fees involved. So in this case, there's a recording fee. These are government fees, recording fee, and a transfer tax. So those get paid to either the city, the county, or the state that you live in. All right. Then we start getting to prepaids, and this is the escrows and your homeowners insurance and odd days interest and other things there. Just so you know, when it says prepaid interest here, what that number is, it's your daily interest on your loan. It's basically a number factored from the day you close through the end of that particular month. So this could be 30 days, it could be 1 day. Okay, so just let you know. So it's basically how much interest you're going to owe on the loan on a daily basis. All right, that's that. Then right here is your escrow. It breaks down. It says in this one, you need homeowners insurance. It's $100 a month, and there's required 2 months of reserves or to set up in your escrow, so it's going to be $202. Your property taxes on this transaction was $105.30. And because of the month it's closing, 2 months was needed to set up in the escrow to make sure it has enough money in there. So in this case, we needed $413 in the escrow account. All right. And then the other is titled, this is the owner's policy. This is basically, this number right here is usually paid by the seller. And this is a purchase transaction. So that number here represents a number that the seller would have to pay. All right. So I just want to go through all these numbers with you. All right. So then it breaks it all down and then it gives totals down through here. All right. So that's page 2. Page 3, we're not going to go over because I don't feel it's relative and I'm going to completely confuse you if I don't have you confused already. So that is how you read a loan estimate. So now what I want to do is I want to make your life a little easier. I'm going to say, let me review it for you on your behalf. We can do it on a Zoom. We can do it however you want. Let's break down every page of this to make sure you guys are getting the best rate and the best fees in the market. So here's what I created on my end to help you guys get this to me so I can review it and get back with you. Basically, you're going to go to therateupdate.com. That's my website. We just put this feature up just the other day, and it's going to be it's going to get revised here in a couple days. So if it's not here, it's going to be right on the front page. We're going to put a big red circle or something here to bring it to your attention, and it's going to say upload your loan estimate. Okay, so, but we have it under the resource section right now. So you're going to go to resources, upload your loan estimate, and basically it's going to pop up this. It's a secure site. You're going to have to create an account to get into this because I don't want anything that you send me to be nabbed by anybody else. Okay. When you do this, you're going to click into this and it's going to ask you just a few questions. It's basically going to let me know how to get back with you. It's going to give me your email address and just write a little bit about something that you're trying to do if there's a unique situation in this. Okay. So what will happen is once you do that, you can upload your loan estimate into this format. Give me an hour, unless it's evenings and weekends. Let me review it and get right back to you. It's not going to be, we're not going to be a hard sale or anything. We're just going to advise you guys, is that the best rate in the market? Is that the best fees in the market? Is the loan program that you chose the best way for you to go about it? So we're going to be your personalized mortgage consultant to help you walk through this entire process and make it easier for you. So that's it for today, guys. So I hope you find value in my video. If you do, please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. God bless, guys, and I hope to hear from you. Start uploading those loan estimates today so we can get back and make sure you're an informed home buyer. Bye-bye.